Whether you're checking your retirement account every day thinking about buying your very first stock or just wondering why the market keeps making headlines, investing right now can feel a little overwhelming.
Yes, it can. Today we're breaking it all down in a way that finally makes sense. And joining us to help with that is Ange Matthews, owner of the Happy Investor Method. Welcome, Ange. This is a very, very important topic. And I think there's just many of us that are scared right now to even invest or just, kind of do anything with your money.
It is, and thank you for having me, because you're right. It is a scary time for those who have been in it, for those who are thinking about it, but it's also a very opportunistic time.
Scary time. It's such a funny thing to say because, like, I opened up my portfolio the other day and it was at an all-time high, and I was like, "This is amazing." And then 20 seconds later, like, I am terrified because this is kind of the trail it's been throughout history, where it goes high and then all of a sudden just DEFCON 5. So how can you kind of predict something like this, or kind of feel it out? How can you kind of test the waters a little bit to be like, we're in a safe place, or this is a little too volatile for me?
I love to look at the past to think about what the plan is now. And even though we have experienced all-time highs for years, consistently we've been at an all-time high, I like to think about, well, what is the plan? Is it okay that I take some money out and I feel good about the money that I've made so far and continue to partake in the stock market? Or is this actually the goal that I wanted? So when I started investing, did I make $1,000, $2,000, $5,000, whatever that is? You have to think about what your original goals are and then make an informed decision, not a gut reaction.
Right. And I think that's part of the beauty of the stock market, and the terror of the stock market is that there's so much emotion that it dictates by emotion, right?
It does, but it also dictates by facts. And so it's earnings season right now, and a lot of companies are reporting how well they did or didn't do. So I think people think it's about emotion, but it's not. At the Happy Investor Method, we talk about actual analysis because numbers don't lie.
Okay, so for somebody that does not know or has never invested, what is a stock?
I love this question. I love the newbies.
Yeah.
And I love to think about it in terms of a cake. So there's a cake that's like a company, and they have slices. And you can buy a slice or a share, and you can sell it or you can purchase it for a higher price or a lower price. And so that's what a stock is. We're all co-owning an entity like Apple or Amazon. And depending on when you bought it, the price might go higher or it might go lower. But over time, traditionally, all of the slices of all of the companies have gone up.
If you want to start investing, I talked to a friend who's like very good at this, and he said, invest in what you like. Like, if you like a particular brand of clothing, invest in that clothing and see like where it goes.
I don't agree with that wholeheartedly.
Okay.
Simply because just because you like something doesn't mean the company is great at making money.
Taste.
And
That's
so
amazing taste.
You probably do.
I don't.
Maybe the company's not great at managing the money.
Right.
And so you want to go with a company that has a reputation for managing money, where they have strong earnings and where they know how to handle the debt that they have. And so I love to say, don't just invest in something that you're using, invest in something that's paying you to exist. So whether it's your profession or your career, you have way more insight into how the company or industry is doing because you're going to company events, you are getting educated on it. You want to make sure to be educated. And so just because you like something, or I might love a certain brand of shoes, but that doesn't necessarily mean that everybody else loves it too.
I'm never listening to my friend ever again.
There you go.
Unless they know what they're doing.
Again.
You gotta listen to her. That's why we have you here. Now, for anyone that is looking to invest or start, what's the minimum they have to invest?
So when I started investing 20 years ago, and I was making $40,000 a year with 6 figures of debt, I would have to save for months just to get to one share. But thankfully now, with technology and the way the market is, someone can invest as little as $1 and own a partial share. So what this means is you're not going to get the full slice of cake. You're just going to get a little sliver of it, but at least you get to have your cake and you get to eat it too, because it's going to grow. Now, this said, I don't want people to think that it just stops at $1 a share. When you start seeing gains, imagine if your dollar were to double, it would become $2. But at the Happy Investor Method, I always say we want to have life-changing results. So an extra dollar isn't going to change your life. But if you continuously grow into investing at least $1,000 or $2,000, well, now that's $2,000 or $4,000, and now we can change the lives of ourselves and our families.
Do you think staying the course is valuable advice as well? Like longevity in the stock market will benefit in some capacity, because people they get freaked out. It goes down, they take their money out, and then all of a sudden it's whatever. Do you think staying the course is the right thing to do?
I do. I think there's a both and. And so it's not all or nothing. If you really feel as if this is your time and you've made substantial gains and you're ready to take it out, think about taking out a small portion of it and then keeping the rest in and seeing what happens. Of course, do your analysis. Actually look at the numbers. Understand why it went down in the first place. Did it go down because there's a trade war? Did it go down because there's a big event? Or did it go down specifically for the company? Once you understand that, you can make a very clear plan. But over time, the market goes down and goes up, and it also goes down. But our clients always tell me they hate it when they panic sell because it goes up maybe about a month or 2 months later, and they're kicking themselves, and they're like, oh my gosh, not only did I sell, I lost money, and I triggered a tax event.
Now, everyone, is usually talking about the S&P 500, S&P 500. What is it, and why does it matter?
So we throw all these terms around, and it's okay if you don't understand it because they didn't teach us this in school, and the average person isn't, just reading an article on the market. But the S&P 500 is 500 of the largest companies in the U.S., companies that you know, love, and trust, companies like Home Depot or Lowe's, Meta, Apple, things that you can go down Main Street and you're going to see these companies reflected. But what I love about the S&P 500, it's that if you need companies to invest in and you don't know where to start, there's a list of 500 of them. You can simply do an internet search for what are the companies in the S&P 500. And above all, you can also just get a fund. So if you don't want to invest in an individual company, you can get a fund. And I want people to think about this in terms of buy an entire cake. You don't have to just buy slices. And when you buy the cake, it's the S&P 500, which typically means the market. So if the market went high, it's the S&P 500 or the Dow. If the market went low, it's the S&P 500 or the Dow or the NASDAQ.
I should have bought stock in Nidos. You see the Nidos, little squishy things that all the kids are talking about right now? Should have done that. Listen to your kids, by the way, if you want to invest. It's very important. And thank you so much.
Thank you so much for having me.
Thank you. Wonderful, useful information. For more info, you can follow Ange at Happy Investor Method on Instagram.